how tough it is to be in my house. The creativity test at datcreativity.com is a online creativity test for Melbourne University that essentially looks for your ability to find a group of words that are least correlated in use. So you take, without any instruction, you take 2 minutes and come up with 10 words that you think are not related. And then it goes through a giant algorithm and text block, a large piece of literature, and it finds the average distance between each of the word pairs that you've collected. And then based on that, it finds maximum distance between the entire word web. So I distributed that to our faculty, and I crushed with this score 93.91. I thought I was doing good. What the software does is you put in 10 words and it finds the first 7 that meet the criteria of a noun, a person, place, or thing, and not a technical word. And then it finds the first 7 that meet that criteria, and then does the math. And I thought I was doing good, being in the 99th percentile. I sent that to my daughters, and I'm in 4th position in my own house. I can't win for losing. This is my current one. I'm now in 2nd place, and this is about as good as I can get. I'm in the 99.89%, or the 99.9 percentile, and those are my first 7 words. So anyway, if you go to let's see, what is it? I put the link on Patreon if you want to play along. If you can beat 98.46, by all means do so. Then send me the words so I can beat my kids. No, don't do that. That wouldn't be fair. I'm working hard on it though. They're sneaky. They didn't see what was the big deal. So the loser has to do the dishes. Actually, we don't have losers. We just have people with the lowest scores. That's because it's the year 2021. All right, so let's get started with the market health check. So I would classify the last 2 days as almost at like a yellow holding pattern after we'd had 5 really good days in a row. Today I count as a green day, an up day. This feels like a positive trend day. We had a small gap up, pushed to a new 10-day, 30-day all-time high. And even though it gave back a little bit at the end, it finished above the long-term fair value in the RL 90 and 30. And the RL 10 has broken out to an all-time high. And this felt like a vote of confidence, a vote to the upside today. And so it feels like that tomorrow should be interesting to see if we can get an additional surge going into the weekend that can hold, or whether that was just a little blip. But for now, I consider that to be a pretty positive sign. And then if I'm, being my usual grumpy self, I think I have my stop here, like at call that 438.5 or maybe 439, like just above yesterday's low. Like I want to capture today's gains. I'd like to. I don't, but I'm willing to give back a little bit. I suppose if you wanted to be really strict and say a 1-day low, you could be here. But I feel like as long as it stays above yesterday's close, then we're kind of in positive territory. So to me, about 439 feels to be about correct. Now, as soon as that thing gets above, if it's able to get above 442 tomorrow, then that's where I would be trying to raise my stop into something like this, like at about 441, and I would try to lock in like everything that was above today's close, and then as soon as I could move that, to like 432 and a half or 442 and a half, I would try to do that and start locking in pieces that are higher than the previous all-time high. Those are the two checkpoints that I want to try to lock in. And if I could get that locked in during the day, then I'd be happy. The big decision, I think, if we have an up day tomorrow, is to consider how much of a swing trade to maintain over the weekend. And it feels to me that if we got a close above 442, that we should feel comfortable with the swing trade, and then this second stop right here at about 441 feels like it should be that should be the relative goal for the swing trade, and then we just play catch up with that next week. All of the other things are looking pretty good. All the other indicators, I would say. You got the RL270 wonders what all the commotion's about. It just keeps moving up and up and up, and that's sort of like as long as it stays like above that line, it wonders, why we're sweating the small stuff. It would look something like that, which would be this stop here. That's if you start looking at that purple arrow tomorrow, that means the stop should be there, and then for the day, and then Friday it would be something like that, then Monday, then Tuesday. That's sort of a incremental stop on the basis of the RL270 long-term fair value, which that doesn't feel bad. And then what that would let you do is, I think if use that with a time stop, then each of these little increments where I try to capture the short-term gains feels like a wedge that I'm placing in there to lock in the gains as best I can until such time as the long-term fair value kicks in. So maybe a way to play that is like sniper and manager, where I use the red stop as the sniper to capture those gains and short term, plus whatever intraday decisions I make for half the position, and then half the position just leave it with the RL270 kind of as the manager. That feels pretty good to me. It just feels like if I were to use the like the Bollinger Band mean as the managerial stop, that just feels like it's too far away to me. I don't want to give back that much from the edge of this time stop here to something like this manager. I think I'm going to use an accelerated manager, something like that, and lock in those pieces of the gains. The other intermediate one to look at might be, you could do the same kind of logic with the edge of the river, kind of treat the river, but that's going to give you basically the same thing as the RL270. You could do it with the spine of the dragon or the southern skin of the dragon, I suppose, or even that RL90, that green line that looks something like this. I could live with that, I suppose, too. So this gets into our treatment of the idea of combining a time series or a time stop manager who just is going to say, look, we're going to pick a trend that we like, that we think represents the longer term move, and as long as price stays above that, then the trend is intact. But if it drops below that, then that's the first sign of weakness creeping in. And so in our intraday trades, we have been using the Bollinger Band mean as that stop. And then we've been using something like the PSAR as the sniper. Well, you can't use the sniper right now because the PSAR just flipped. But going into the weekend and after already seeing this nice move, I want to have a more aggressive sniper to take advantage of this move. And the reason I say that is that we've seen that little sell off, we've seen this larger sell off, and now in each case there was a recovery. That's true. But when we are this far advanced up the stack, I don't want to tolerate a move all the way back to the Bollinger Band mean. So what I'm considering then are these time series. The RL270, that feels correct to me. The RL90 I could live with. And I think either one of those two is to be preferred to the Bollinger Band mean. If you were going to take the orange line there and project the spine of the dragon, I suppose, you could make that argument. Or the lower skin of the dragon is not irrational. So one of those four, the RL270, the 90, the spine or the lower skin of the dragon, feels kind of correct. I don't know that there's much advantage to using the edge of the river. You might as well be on the RL90 at that point. I just think I think I'm going to use the RL270 just because we are such at an extremely high level of price relative to the long term, and we've already seen three corrections already in this run in the last 30 days. I think we've seen 1, 2, and 3. So that feels to me like leg 1, and this is leg 2. It feels like we're stalling a little bit more, whereas this was like really uninterrupted for 10 days. This only gave us 3 or 4 days in a pullback. So I think I'm over-explaining it, probably overthinking it. Just make a decision and go with it. I'm going to use the RL270, and what that means then is for tomorrow, my managerial exit is going to be this one. I'm going to anchor it on tomorrow's price bar, and I'm going to take that as the I'll call that 439, right? That's what I'm going to use. And then if that holds on Monday, I'll just move that up to here, then Tuesday, then Wednesday, and so on. The RL270 doesn't move or doesn't deviate that much. So that's actually a pretty stable line, and that feels to me like it's in pretty good shape. Let me know if you found that useful. This is me thinking out loud to myself and trying to generate some artful judgment on the basis of the context that I see. I'm using the indicators to frame out my decision. I have structured decisions, and the structured frame of reference gives me some discipline and perspective on where I want to make my decisions. But and then the rest of it becomes an emotional risk management thing, like how much am I willing to give back versus how much I have, that kind of stuff. If I took a look at this as a on a reentry basis, just what I have in hand versus what I risked, I might do it this way. So let's see if this resonates with you, right? So my initial risk on the reentry here was the edge of the dragon. So this was that was my risk, $4. So I was risking 1%. And now what I have in hand is this. Let's see if I can get that. Yeah, there we go. So I have that much in hand. Now, when I use this stop, what I've really done is locked in. Let's call that like a no lose plus dinner for two. I mean, essentially, that's I've locked in that green box, presuming that it doesn't gap down lower than that. And then what I'm giving it is how much wiggle room. I'm giving it this everything north of that stop up until the high of yesterday as the wiggle room. And then if it gets above today's high, then I'm really positive about this, and it feels like that would be I'm gonna when my bias gets really favorable, I suppose. Let me put that in purple. Anything north of that, I'm really picking up a positive bias, and I want to get a second position in there. So that now feels like I've locked in no lose plus dinner for two, kind of locked in almost 1R by going to this stop here at call that 439 in the S&P. That feels correct to me. I can go to sleep with that plan. Okay. That's what I want to say about that. All right, let's shift to the sectors. Yeah, again, if you found that helpful or interesting, let me know in the chat box there. Let's see. Let's skip this. All right, so today we had the SPY turned in a 0.41%. Underperforming was technology at 0.18, and then treasuries gave back 0.5% to 148.82. As long as that's above 145, I feel like it's still in great shape as the alternate to the market. And that was the big underperformer today. So the S&P at 0.41, underperforming was tech and treasuries. DIA was basically equal to the S&P at 0.42. Emerging markets 0.5, so that maintained yesterday's little gains. Yesterday it really dominated the U.S. Today it was slightly better. I take that as a bit of a positive sign that it could hold the gains. Now it didn't have a whole lot of follow through. When we've been following this trade for a while. And when we look at EEM, this is the trade we had yesterday, and had a nice big gap up, sold off to yesterday's high, and then reversed. So it made some progress today, and you note that the whole moving average is pointing to the upside. I take that as a good half step up, some positivity. That it's had some nice recoveries and held above all of yesterday's range. I take that as a favorable sign. So I'm still working emerging markets here. Then better than emerging markets was the Russell at 0.77. I take that as a positive sign when the U.S., which has been strong, puts the speculative small caps, the growth-oriented small caps at a premium there. So that actually feels good. We know that the Russell has some catch-up that it has to do. So on any day the market's up, but the Russell is better, I take that as growing confidence, albeit slowly, in the U.S. Speculative market. All right, let's look at the sectors that underperformed. So we have the crypto large cap blend, the lumber, Japan, moonshots, and ARC innovation, all slightly worse than the market, but still in the green. The FANGs, Brazil, marijuana, oil exploration, ARC genomics, and agriculture, all underperforming the market a little bit, down to minus 0.36. So fractional losses in there. The bigger losers today, blockchain, S&P Bio, and VIX. This is still a good sign, though, for tomorrow when the volatility ETF is losing money. That is a reinforcement of the upside potential. Then the symbols that underperformed: PayPal, Coinbase, the Bitcoin Trust, Virgin Galactic, Ethereum Trust, Squarespace. So these are all the disruptors and the cryptos in that finance space, plus Virgin Galactic. Microsoft underperforming a little bit. So that's actually not a bad set of things to underperform. So like we're going to see that most of the conventional sectors outperform, which is a vote to the long side for the broader market, which reinforces that Russell insight too. So we had technology, staples, commercial real estate, clean energy, Mexico, the other lumber, energy, finance, basic materials, consumer discretionary, blended commodities. All of those were double the strength of the S&P. That's a really broad set of winners. And we've often compared the tech winners, XLK, against B, F, and E, materials, finance, and energy. And when all three of those, and especially consumer discretionary, those broad sectors are all better than tech, that is a sign of broad market weakness in the basic, Main Street. This is not the tech speculators in crypto. This is those great American companies pulling this market northward. And that is actually a healthy sign. Oil and wheat and precious were better. Lithium batteries doing well. Then the individual components. Cliff Natural Resources continuing to crush. Tesla had a vote up with 4.5%. It's above 675 now. That's a good sign. U.S. Steel. There's Alcoa, and there's that Tecrion or whatever, that TX steel company that Ken H got us turned on to. So all of the metals, plus Tesla, and then there's John Deere. That's a very good sign. And now XLB is starting to give it a boost. I think there's more room for those to gain going forward. So if we took a quick look at Cliff. Yeah, I mean, this is pretty good in Cliff. This is now, we looked at this back here when it was a, in this block, we looked at it as a, like a supported spring crossing developing along with a Kata 2 and a supported spring crossing. And then we said there was this first block of gains, 1, 2, and then 3 would take it back to the previous high in the Z3 excursion. And today it got through all that, and the pullback kept it right at the Z3. So this is free and clear. That's how good Cliff is. There's no looking back on that. That feels pretty good. So we're going to respect that gain, I would say, by putting a stop. As always, I got to rain on the parade. To me, that stop's got to be like right, I think at the previous C3, like at about 24.25. That's how much room. There's a little blue dot. Let's call the Hall moving average. That's pretty good. That's how much room I would give it right there at the Hall moving average. I'm starting to like that Hall moving average quite a bit. And so for those of you on TC2000, that's just, I'm using dots, a period of 3, and I'm just using the basic price as the data source. And I'm using the average of the last prices. In this case, it's the closing price. And that is a very adaptive to current price kind of a moving average. Okay? So that's what that little blue dot is in the Hall. So I like that. Let's look at TX while we're here for Ken H. That was up 2.5%. That feels pretty good. This little consolidation block has resolved to the upside. That all feels good. And before, on that first breakout from last week, we said as long as it stayed above this thick blue line, it stays up and to the right. That's very good. I would be willing to then say, look, let's take the previous resistance and say that's support. Now I could go to the those two Hall moving average dots and just kind of leave it at the 1 bar low. I think I would use, oh, there it is. Look at that. That little Hall moving average dot just feels correct. So right there, I think we wanted to see it up and to the right. So Ken H, got your ears on there. I would say at 49 even is probably about where you want to be on that swing trade. Is that making sense to you? Up and to the right. What's starting to evolve in my mind is the use of this Hull 3 as an aggressive PSAR. It's much more sensitive to the twisting and turning of these little waves in here. So I want you to think about that as an accelerated PSAR for like the short. Because I'm looking at the day chart here. Now if I go inside the intraday, like if maybe I look at here's the 15-minute chart. This blue line here, this is that second blue line. That feels pretty good. And I could also live with that like being right here at 49.25 if I wanted to be even a little more aggressive. But for right now, that feels pretty good right there. Call that 49.10. That feels pretty good. The 30-minute chart, yeah, that's good to go. This is a pretty good right at the top of the previous resistance. That feels like it made a quantum step up out of this chunk into here, and it's holding that pretty well, and we've given it a little bit of room, so I like that. Feels good. All right, back to work. Yeah, so that's the sectors, and Tesla, U.S. Steel, Alcoa, John Deere. John Deere is just quietly getting it done. It had some momentary weakness a while ago, and it has recovered really nicely. Remember, this is a good industrial company that competes with Caterpillar, and they do a great job of artificial intelligence on their tractors, and I think you want to notice that this has now moved out of the let's see where we're at here. It's moved out of this support level in here and is now like a Kata 2 and moving up nicely, and it's co-equal with this little chunk. Let's see, this support and resistance level in here. So now if it can get above like this Z3 pinch, now it's up into here and it's looking for 385. So this feels good. I think you could reward this with the idea that you want to play towards like 390 and the hump of the dragon and the RL10. That's really where I think the next fair value discussion will be, is when it gets up into this region. So this is the opportunity region for the practical gains. And then if it breaks above 390, then it's long gone, and everything is great. Look, I mean, that's just as good as it gets. Long term, that feels like a giant Kata 2, doesn't it? So if we looked at the weekly, we would certainly see this as a Kata 2 just starting and looking pretty good. So I think John Deere, there's still time to get on board that tractor. And there's some measured moves to the upside. But under what conditions of bringing jobs, industry, and self-sufficiency back to America does John Deere not do well? I mean, the combination of AI, robotics, tech, agriculture, farming, great American company, tractors in the heartland. How do you not love John Deere? We've been in love with this thing ever since the bounce from COVID in 2020 when it was at 130, and now it's at 360. That's only a 200% gain. Let's remember, we are not the descendants of fearful men. And John Deere for victory. +1 if you know who that quote is from. We are not the descendants of fearful men. For those of you keeping score at home, look up Edwin R Murray and his use of that quote in the McCarthy anti-communist trials back in the 50s. We are not the descendants of fearful men. It will strengthen your courage. All right, let's go to the trades the guys made today. Some good crosstalk with the folks, and so they're using the tools as designed. Wing Chong with a beautiful flashcard here. I'm telling you, dude, I'm just going to snapshot that right now. Yeah, Edward R Murray is the guy, and he was responding to the excesses of the McCarthy era congressional hearings. When they were blacklisting all the Hollywood people and running amok in the 50s, and he was advising people not to take counsel of their fears, to be of good cheer, to be stout-hearted. Yeah. So this is Wing Chong and Cliff. He's got a perfect Kata 2 entry. Maybe a 10 or 15 cent risk. That's all that's needed. There's the VWAP, and it works in his favor. He's concentrating on managing one position precisely. So we might have been tempted for a second position, which would have decayed a little bit in here, but really nails the sniper exit and then the re-entry with an even smaller risk, and crushes it with the sniper once again for 4.2R and 3R. That's what 7R looks like, and then a fractional loss nets 6.4. Great shape. Boy, I don't know if you can do it better than that. That's why we like Cliff. He found the mover. This one is Tesla, and you'll notice that this is here's leg 1, and then the long sideways quiet channel, and then he crushes the Kata 2. And whether you call that an SSC or a Kata 2, I accept your judgment. I think of that as a Kata 2, to be honest, because this is really not a harsh winter. That is not a harsh winter. Even though the RL10 is in the red, it never even got out of the Z2. And we had the red happened in the sideways quiet channel with no real loss of price. So I really consider that to be a Kata 2. That is failure to fail, and it's a resumption of the trend, so that's just nice. Kata 2. He's using the PSAR, and then here he locks in no loose plus dinner for 2. Beautifully done. And he does it here instead of waiting for the 3 dots above, but he gets it to the same price level. And now he just resumes the sniper along the PSAR, and now he notices this acceleration, this burst out of the Z3 and range expansion, and he says, you know what, I'm just going to lock in 1 bar lows, and then just hold that, and then on the next range expansion, goose it up. And now he's trailing with a Z1, and it already feels like a big win. And now he's trailing at the edge of the river, and that feels really good. And then a perfect sniper exit. And then the blue is how much he gave back, and that's 7R. So that's 13.5 R that this morning between Tesla and Cliff. So, like, what are your questions? Like, that's what we want, right? I think that's what we want. You don't have to be chasing multiple positions, and complexifying your decision making if you're working with some precision. And if you're keeping just one position in there and you're in the money all the time, that there is a real profound sense of serenity and almost detachment as you start talking your way through, where you want to adjust the stops based on the specific trade that you're in, as opposed to maybe generic rule sets. Once you start feeling your way through the trade like a craftsman exploring the wood in his hands and with his eyes, as he sees the grain unfolding, as you start carving away pieces of that wood and the inside of the wood begins revealing itself more and more to you because of your careful attention, then that artful feel comes with it a sense of serenity and invigorating satisfaction of a quiet craftsman's nature. That's what I am seeking, is that inner alignment and inner peace with the trade that is doing what I had hoped it would do. Now notice that the PSAR dots always feel, well, of course, the PSAR just kept it all the time. But what he's done here is this little acceleration allows him to capture more of that abnormally good move. Like, you didn't know it was going to just hold here. And this red line allows him to preserve the good move. And if any of these 8 or 9 bars here had resulted in a fail, he'd have been happy to take that, because that's an improvement over the sniper exit, which is a big improvement over the Bollinger Band mean exit, right? That's a really carefully measured and carefully constructed scaffolding for a very satisfying exit. I just think that's a work of art. I'm just going to enjoy that moment. This is Jamie, U.S. Steel, the movers. He gets like a morning hook and a Z1 excursion, this little breakout above yesterday's PSAR. That feels really good, with a tight stop here at the edge of the dragon. And it's riding the Z3. And then he takes a 1, 2, and out for 2R. I don't mind this exit. This stop and reverse on the RLXD. That feels all right. That's worth a shot. You're playing back to the Bollinger Band mean and the return to yesterday's consolidation. This is a nice Kata 2 that then gives you that back. And now here's where it feels like the same short. This little excursion was not as big as the previous one. Running out of steam. There's your P1. And nice 1R. This was worth a shot. Scratch, good exit. And then you stayed out of the Crocodile River. So we'll take 2 that way. A 3 that way, excuse me. That feels good all the way through. This was Luke with CLF. Now this is a little busier because you notice he's trying to get those second positions in quicker. Maybe over trading up in here. I'd like to see you just concentrate on one good entry. Those second positions are not really paying off for you, I would say. So let's get one good position in and manage with care. Like this one gave back half of the gains of this one. So let's scale that back a little bit and leave a piece for somebody else. And let's see how that affects your state of mind. That more relaxed state of mind may allow you to trade another symbol. You might also you might want to think about trading Cliff on 2 time frames. This is the 300 tick, maybe a 800 or 900 for a longer orderly move, which would have kept you into that position this whole period of time. Try that on 2 charts, Luke. See what that does for you. A 300 tick and then a 900 tick. So that way you have like the 1-to-3 ratio between fast and slow. And see how that feels. And then when you map the 2 strategies side by side, see if that that gives you some benefit. I think it might. This was this was Cliff later in the in your review and trying to trade and get a lot of reps in. So, it starts off with 2.5, and then that gets frittered away through effort. Now you try to get reps in, so you're looking for reasons to trade. But what I would say, for example, on this trade here, you're already over trading, so you should be stopping and reversing here instead of waiting for a half of an hour recovery. This is you're front running the collapsing dragon essentially. So it just feels like you're over trading, but you were still good to go over on this one. I just think all of these RLXDs are happening inside the river. You're not seeing the big excursions out. This is, like for instance, this one breaks below the Z3. That's a Z3 pinch, breakdown and go. That's what you want to see, is the abnormal price move that's happening. Right. So all that's pretty good. Let's go to daily report. Alrighty, let's get the... So we are still in bullish normal. Now we're back to overbought everywhere. Still a little one note of caution from the risk Z and the risk index. We got a little healthier with the percent stretch. We're up to 12% stretch away. We had gotten as low as 8% last week. Risk Z is trying to roll up, and we're hoping to see this kind of a move. Hasn't happened yet, but we're poised on the cusp. And that's why I think tomorrow will be really interesting to see if it can break above today's high going into the weekend and hold. Like if it can hold above today's high, that would be a strong vote of confidence. Handful of dojis today in the Dow 30. Let's let that come up on your screen. The only breakout was in Nike. And so 7 or 8 dojis, just a couple auto framers. Amgen is the only interesting pattern in there. It's a channeling, a 5-day down, and it's been underperforming so much. It's the only one that has a single-digit RSI2. So Amgen is actually the anomaly in this great big stack. So if you're looking for a value play, and Amgen would come to your attention. And this is actually not too bad because it's almost like a Kata 2 and it's at the bottom end of its channel. Yeah, there's much better ways to play than that one. Not a fan. Oh, that's a weekly. I'm sorry. On the daily basis, uh, the argument for Amgen is that you've got a channel that looks like this. Between Z minus 1 and Z, or Z minus 2 to Z plus 2, and you're getting a chance maybe to buy it in here. That's just not a lot of. That's kind of like sideways choppy noise. I you could trade that, but I just think there's better, more compelling things to trade, like like Alcoa. Wouldn't you rather tap into that momentum? Like if that gains momentum and above here, then you're getting a breakout above here, right? And so now that one really feels like it could go, and you would sense that there's real enthusiasm in that. Whereas Amgen is just like in the bottom of a sideways channel that nobody cares about. There's no compelling technical reason why it should break out. Whereas you have the material sector and all the metals are recovering strongly and looking good. Like TX, you'd much rather play that momentum than Amgen, wouldn't you? Well, I would. And where's U.S. Steel? And then U.S. Steel has a compelling breakout to the upside story as well. I'll let that one come up on your screen. So even though Amgen, pushes our buttons for patterns that we like, the risk reward is just not really there. It didn't fire on the auto framer, and I just think there's other better things to look at. Like, let's look at Nike. It doesn't have any patterns, but it's the only one that broke out. So what does a big breakout in Nike look like? Sure. And you will recall, Ken H., we talked about this one way back in the day when Nike had that blowout earnings and that enormous gap up, and we said, look, it has to hold above this little critical state that we drew around 152, and that as long as it stayed north of that, that we'd be happier than a dead pig in the sun on that position, right? And it's done that. And there was even a COTA 2 available here at like 162, and it's doing nothing but continue into March. So all other things being equal, who wants to sell Nike right now? Who that has enjoyed this powerful move up, and it finally broke out? This is like that same channel that Amgen was in, but it's already resolved that, and now it's a clean break to the upside, and there's no compelling reason to sell it at all. So given the choice between Nike and Amgen, why would I look at Amgen when I got all the metals, I got Tesla, got the energy sector, got finance finally coming back online, and Nike? So in terms of filtering the list, that's how I'm thinking. So Nike is much more compelling to me right now. Next up, the ETF 30 tactical. Handful of dojis, just 2 auto framers. Blended commodities on the strength in agriculture and energy doing well. And you got quite a few broad-based breakouts in here. You got emerging markets is still doing great. I still like that. I think it's early days. You got Brazil. Moonshots and PBW were okay today. So auto framer, straightforward. There's your framing data on the 4 symbols. Emerging markets and treasuries for the defense. Keeping my eye on that one. Broad-based moves especially in the ETFs. Look at all the ETFs that had breakouts on the 2-day and 10-day ranges. Much broader strength than, let's say, we saw in the Dow. This was a shift to some of the other, to the globals. Look, you got Mexico, EAFE index, you got Europe finally playing catch up. And I like that finance is starting to play catch up as well, and materials. So all that looks good. All right, that's everything we got for today. Had covered a lot of things, so that's a pretty good hour at work. Let's go ahead and get this published and posted, and off we go. Hey, I do want to say this. So I gave the where's my little? Oh, here it is. So I gave a systems thinking presentation to the not super traders. I guess a lot of super traders and some Tharp Institute folks. And I put together about a 120-page slide deck for them that hit a lot of the things you can talk about in systems thinking. So systems thinking is a style and an approach and a discipline of how to look at a complex world that has moments of order. And there's a 70-year body of knowledge about systems and how they work in a wide variety of settings: biology, chemistry, mechanics, psychology, ecology, manufacturing, supply chains, and all that, information management. And I've been studying it for 25 years or so. And so I'm coordinating with, for a certification with the Water Systems Thinking Foundation. I have a phone call with the VP of theirs next week to discuss some collaboration for teaching. And I made an offer to the Tharp folks that I normally sell this course for $1,000. It's the course that I teach for my grad students in doctoral programs and in master's programs in a variety of universities. And because they suffered through the presentation, I offered it to them for $500. So normally my grad school students pay $3,000 for tuition for this course. And so I want to give you guys the same offer. If you're a platinum member, I'm just going to make it available to you as part of the platinum subscription. If you're not a platinum member, but you'd like to take that course, I'll give you the same deal I gave the Tharp Institute folks. And these are the 23 lessons that are already built into the course. There's probably over 20 hours of lectures and exercises and stuff. And I'm also going to give everybody the big slide deck and then lecture to the different concepts that are in there that people want to hear about. So I'm building this one as we go. So I'm going to make that offer available. I will probably start it up in mid-August officially. Give people a couple of weeks to get working on it. Or maybe 1 September, I don't know. I think maybe 1 September I'll get started officially with that cohort. But you can always get started early. Anyway, that's what I wanted to say about that one. So we'll get this published and posted and get this out on Patreon. So thanks a lot for your kind attention, and we shall see you tomorrow. Ready to rock. Ready to rock.